bank. SVB marked the third largest bank failure in U.S. history and certainly the largest since the 2007-2008 financial crisis. I've said it many times before, and I'll say it again today, that there were three major components to SVB's failure. First, the bank was rife with mismanagement. Second, there was a clear supervisory failure, and our regulators were certainly asleep at the wheel. And third, President Biden's reckless spending caused record high inflation, which resulted in drastic interest rate hikes and tremendous loss. When you print and spend trillions of dollars at the end of COVID, we should not be surprised that we have record high inflation. Record high inflation translates into today still 40% higher for gas for your car, 30% higher for your food, 20% higher for your energy costs. The devastation the average American is facing because of Bidenomics is undeniable, but certainly measurable. So I'm glad to spend some time talking about the state of our economy, an economy that has been ravaged, as I've just spoken about, by inflation, suffering under the weight of an open border and millions of illegal immigrants, and drowning in disastrous regulations. I hear from my constituents all the time that inflation and an unsustainable cost of living continue to impact their families. For far too many, the American dream seems further and further out of reach than ever before. And frankly, the past 3 years of this administration's failed policies have landed us right in that spot. In fact, last month, Treasury Secretary Yellen sat before this committee and attempted to spin a narrative of how strong the economy is, how well off consumers are, and how much people have in the bank, thanks to Bidenomics. But in the midst of this, she also admitted that many prices are not going down. In fact, she said, and I quote, "We don't have to get these prices down." Tell that to the mechanic working in South Carolina. Tell that to the teacher trying to put gas in the tank. It is simply unacceptable. Because the truth is that Americans are now spending more of their income on food than they have in 30 years. The truth is that housing affordability remains at its lowest level in 40 years. But inflation isn't the only concern I'd like to raise. I'd also like to address the economic impacts of illegal immigration. During your recent interview on 60 Minutes,
like, what does this have to do? What does this have to do with Powell? He doesn't make border policy. They do. It's crazy.
A nation of immigrants, no doubt. But when we talk about illegal immigration today, we must also face the dire reality that our towns and our cities are suffering from the adverse impacts of illegal immigration facilitated by the Biden administration's open, unsecure, and unsafe southern border. Because of President Biden's policies, we've seen over 7 million illegal immigrants cross our borders in just 3 years. By the time this election happens this year in November, the numbers suggest it could be as high as 10 million illegal immigrants coming into our country. So we cannot have an honest conversation about the benefits of legal immigration in our labor force without also addressing the elephant in the room. Our country is strained. Our economy is strained under the weight of illegal immigration. In fact,
all right, what is going on, guys? Good to see everybody. They started a little bit early, but it looks like we haven't missed anything. It's just going to be more of the same. So in terms of what I think the market is going to do, and honestly, I missed a long this morning. I had a long setup that never took my order, which sucks. And I know you might be thinking to yourself, why would you long at the high? I'm going to show you the order real quick. But it was basically this right here. longing the NASDAQ at the high before it got into the box that it's currently in. So you might be thinking to yourself, why would you long the high there? Well, it's because if you follow me if you're not on in the Discord and you follow me on Twitter, you would have seen my post from earlier. By the way, follow me on Twitter and Instagram, where I post free daily trading and finance content. But what I was saying before we got into this, what we call balance price range, before we got into it, we were below it, and we boomed 100 points on NQ in just a few minutes. But this to me was the draw on liquidity, at least before addressing these relative equal lows. So what I think is going to happen is we will trade into here, and we will trade into this daily volume imbalance as well, and then before coming down and taking out these lows here that are at around 17,833 on the NASDAQ. Now, this is something that happened here too. We have a balanced price range. We had a daily volume imbalance, right? And we traded into it and then took out these relative equal lows. So I think the same thing will happen here. These balance price ranges are extremely effective in terms of the way price reacts to them. Like, it would be very, very, very weird if price didn't react to them at all. Now, what is a balance price range? Basically, you have a fair value gap here, right? This one. And then you also have a fair value gap that was made on the exact opposite side. So we made a fair value gap. We upside down V'd, right? And then created a fair value gap on the way down. So these opposite each other, this is called a balanced price range. And the way that you would trade this is you would use the smallest of the fair value gaps as your rejection point. The only thing is, as I mentioned, we also have a volume imbalance. And a volume imbalance is a two candle, I don't want to say pattern, but a two candle array, right? So in between here, you have a space. This is called a volume imbalance. And if you broke this down into smaller time frames, you'll see that that is just a bunch of fair value gaps, right? But on the daily, it's this volume imbalance. So I think that we are going to continue to trade into here. And that's why I wanted to long it even at the highs, right? So yeah, and in terms of balanced price range, fair value gaps, all that stuff, we're going to go over that we have session 2 of the mastermind tonight. It's going to be tonight at 7 p.m. Eastern. A lot of you attended session 1. We had opened that one up to the public. This one is not going to be open to the public. Oh wow, I like this potential long here. So session 2 starts tonight. If you're not part of the mastermind and you want to join, we are still open. That link is in the description. And you might see a coupon code in there. If not, let me know here. I like this trade here. I think this is going back to at least here. Let's hear Powell.
Strong job creation has been accompanied by an increase in the supply of workers, particularly among individuals aged 25 to 54, and a continued strong pace of immigration. Job vacancies have declined, and nominal wage growth has been easing. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. The strong labor market over the past 2 years has also helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased notably over the past year, but remains above the FOMC's longer-run goal of 2%. Total personal consumption expenditures prices, or PCE prices, rose 2.4% over the 12 months ending in January. Excluding the volatile food and energy categories, core PCE prices rose 2.8%, a notable slowing from 2022 that was widespread across both goods and services prices. Longer-term inflation expectations appear to have remained well anchored, as reflected by a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. After significantly tightening the stance of monetary policy since early 2022, the FOMC has maintained the target range for the federal funds rate at 5.25% to 5.5% since its meeting last July. We have also continued to shrink our balance sheet at a brisk pace and in a predictable manner. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. We believe that our policy rate is likely at its peak for this tightening cycle. If the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. But the economic outlook is uncertain, and ongoing progress toward our 2% inflation objective is not assured. Reducing policy restraint too soon or too much could result in a reversal of progress that we've seen in inflation and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the policy rate, we will carefully assess the incoming data, the evolving outlook, and the balance of risks. The committee does not expect that it will be appropriate to reduce the target rate until it has gained greater confidence that inflation is moving sustainably toward 2%. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Federal Reserve will do everything we can to achieve our maximum employment and price stability goals. Thank you.
Thank you, Mr. Chairman. You've acknowledged the Fed likely waited too long to raise rates when prices shot up in 2021. We can't make that mistake again, Mr. Chair, at the expense of workers. If the Fed waits until unemployment starts increasing, it may be too late to cut rates in time to save American jobs. Why shouldn't the Fed act now to prevent workers from losing their jobs rather than reacting after the fact?
So we're well aware of that risk, of course, and very conscious of avoiding it. And what we said is if what we expect and what we're seeing is continued strong growth, a strong labor market, and continuing progress in bringing inflation down, if that happens, if the economy evolves over that path, then we do think that the process of carefully removing the restrictive stance of policy can and will begin over the course of this year.
I mean, I know we've had this conversation publicly here or privately also that, working people are hit the hardest with inflation. They're also hit the hardest when companies try to cut costs with layoffs. This town too often seems to forget that maximum employment is part of the Fed's dual mandate. Let me ask you about bank supervision. Senator Scott mentioned that. Last year's bank failures illustrate the need for strong oversight. SVB grew too big, too fast. Fed supervision didn't react decisively enough. The Fed, in response, undertook an assessment of its supervisory process to identify and address gaps related to the speed, the force, the agility, if that's the right word, of its supervision. Explain what concrete steps the Federal Reserve's taken to strengthen supervision and any specific areas where work to make improvements is ongoing.
So this is a very broad area of work. There are, many people in the Federal Reserve System who are involved in supervision, thousands of them, and there's a rule book, and so there's been careful study and thought and a lot of listening to understand how we can meet those goals of being quicker and more effective. Basically, is how I would say it. If you look at Silicon Valley Bank, we weren't quick enough and we weren't effective enough where we were in, and so we're working hard to develop a new rule book and another set of practices. which is still going to be evidence-based and fair, but it's going to involve earlier interventions and more effective ones. And you know, I think this is work that's ongoing and will be for some time.
Thank you. The job of the Fed, of all public officials, is to serve the American people, not their stock portfolios. We've seen abuses in this body. We've seen abuses at the Federal Reserve.
Told you guys we were going for these highs. And I think we're going to keep going up until we hit that volume imbalance, which will be at the top of this.
On the 6th.
And it will be finished within 6 months when you're back?
I want to get it right. I certainly hope so and expect so.
Expect so is a better answer than hope so. One last question. More and more, many companies use algorithms that combine competitors' price information to engage in what they call dynamic pricing or surge pricing. You know that corporate PR teams worked hard on this. Just another way for corporations to make it harder for consumers to seek out lower prices and to pad corporate profits. Are you concerned that the wide adoption of these price gouging strategies, these pricing schemes, if you will contribute to inflation?
I mean, I think it works both ways. Let me say that, you know, we're well aware of this.
Am I looking for a short? No, I just said I think we're going to go up here.
Go up when there are a lot of people. If you're doing dynamic pricing, same thing with the ride companies. It works both ways. I don't know that it have implication for for inflation. It would certainly have implications for consumers who need to be informed.
You think that this kind of surge pricing might lower prices overall?
I mean, that's my understanding is that the idea is.
That's a super good question, B. Super good question. I'll answer you.
This actually go down, and in higher period, in busy periods, they go up.
But these are sophisticated economists working for these big companies, and they're not going to do things to lower their profits.
I think the price mechanism is incredibly important in our economy. I think we need to give companies the freedom to do that as long as they're not fixing prices or failing to disclose the nature of the price changes to the public.
I have a few seconds. Research has indicated constrained supply was behind a significant amount of the inflation we've seen over the last few years. If the supply chain, for instance, of autos had been more resilient, or if there had been more housing availability, would that have made your job easier?
Yes, in a word. Yeah, a big part of the inflation was, and we saw it in 2023 when the supply chain problems unwound and when the labor supply shock that we had unwound as well. We saw inflation come down very quickly in the second half of the year. But it's also down to, tight monetary policies playing a role as well.
Which leads me to the plea with you to speak out about inflation, about the contribution of corporate profits and greed to inflation. Thank you.
Oh, I know you are done. That's true. Well, I was
Find yourself agreeing with me more and more often? Is that what?
That would be a nightmare, and I'm awake. So what I would say, however, is that the fact of the matter is that so often, if in fact 60%, I actually listened to what you said, which was remarkable. The fact that 60% of Americans today can't afford a $1,000 emergency, I can't imagine how the average millennial affords a down payment for a home. I can't imagine how they take into consideration when they're looking at a snapshot of their financial future, fixing and repairing or having a plan for obsolescence that happens for every homeowner in the country. I think the issue is far more complicated.
All right. Yeah, I agree about Jerome being sort of stone cold in the face of these questions. I think gold gets here. Let's see where it wants to bounce from. Let's see where it wants to bounce from. If it makes sense, probably from this fair value gap. What the hell? Man, I was so pissed. My order for NASDAQ didn't take. That went like 100 points in a few minutes. Three. What could have caused it to not take your order? No, it didn't retrace to my entry. So my entry was, where was my entry? My entry was here, but it rallied to my target profit, which was around this range, right? So it went to my target profit already, so I couldn't, retake the order. But my entry was here. So I was waiting for it to retrace back down here into this imbalance before taking it long.
It's really not appropriate for us. We're independent. We like to remain that way. And the way we do that, one of the ways is by staying out of political issues that we really aren't assigned. And so the kinds of issues you're talking about are very, very real. I don't deny that, but they're really not for us.
So the Fed does not consider the impact of 10 million illegal immigrants coming to our country and the costs associated with those illegal immigrants.
Why the fuck would the Fed care about that?
Consider the impact on states like New York or California or Illinois, where the devastation of crime ravishing the poorest Americans has an impact. We don't take that into consideration.
So we do, and so does the Congressional Budget Office. We do try to estimate population, and we try to estimate the effect of immigration, legal or illegal, on the size of the workforce and on GDP. If you look at the Congressional Budget Office has, as you probably know, a detailed assessment of all the things like that. We don't really have a way, and we do look at the finances in the aggregate of state and local governments. And the hiring that they do. So that's something we look at, but we wouldn't do a very specific assessment like that. I mean, CBO would, but we wouldn't do that.
Thank you.
This has got Senator Menendez of New Jersey's recognized.
You said if gold gets to 2162, you'll short it? It's already at 2162. That's the price that it's at now. I would look for it higher. Yeah, I always use the adjusted on TradingView. Yes. I think we get here before making a move back up. I might even take it from lower. If NASDAQ rips, what does NASDAQ have to do with gold? In my trading view, I have 2153. You're probably on a wrong contract. Ay, ay, ay. What time is it? Okay. So 10:30. Maybe I ladder in here. Maybe I take some from the 5 minute and some from the 1 minute. Yeah, I'll go over the equities in a second. I'll go over Apple, Tesla, etc. in a second. Can you make another video about strategy with Top Step? Like what? Just a random video? What do you mean? What in the first one didn't you see that you would want in the second one? Thanks for the call on Celsius. Hell yeah, man. Celsius is killing it. I'm about to have some shares called too because I sold some covered calls against it. All right, let's see. No, I don't recommend options as an alternative to futures. There is no alternative. Every instrument is its own thing for a reason. Okay, let's see. So it might bounce off of here. This 5 minute that I had initially wanted to take it from. But if you look at today's price action, it's making a habit of fulfilling these fair value gaps fully. I just think we might trade up into here and retest this area one more time at 2165. How do you feel about QQQ? What do you mean? How do I feel about it? Like, am I in love with it? What do you mean? How do you feel about In-N-Out? I think it's a great fast food burger chain. Feeling sexy. Let's see what this does. Let's see what this does, guys. Just waiting for 445 for looking at puts. Oh boy. Everyone wants to short the top. Nobody wants to trade with the trend. Guys, more money is lost trying to find a reversal than trading with the trend. All right, let's see. I think Z Gold. What about it? I think that we dig some more up into here on NASDAQ. I think we make one more push up into here. Trade the trend, but don't buy at the highs. What are you talking about, Astro Geek? Are you talking about an investment or a day trade? The hell are you talking about, bro? I'm saying when you're day trading. I'm saying when you're day trading, right? I'm not saying buy QQQ at the highs. I'm saying when you're day trading, right? Following trend in a day trade, meaning in and out the same day, following the trend will make you more money than trying to short every pop. That's what I'm saying. I'm not talking anything about buying at the highs. I'm not saying come in here and make a purchase in your IRA for QQQ at 445. That's not what I'm saying. That's not the same thing as saying, going long NQ to get from here to here. So you have to separate trading and buying. Please correct me if I'm wrong. QQQ. Oh, I got to answer the question about the balanced price range that someone asked earlier. Apologies, whoever that was. QQQ on the daily formed the RSI divergence and is overbought. Do you think that we're close to correction? I think all of these concepts, RSI, overbought, are all nonsense. I don't think they really mean anything, to be honest. So no, if you're just talking about based on that, I don't think we are close to a correction. What is a good SPY entry point? I think you missed it, bro. The market doesn't, I think there's a misconception that the market is offering up deals every day. It isn't. It's very few and far between, right? But when it offers up deals, it's usually, when you're in a bear market, it feels like a long time, but it actually lasts a pretty short amount of time because the market is up 3 out of every 4 days on average, right? So the market isn't just giving you deals every day. You're not looking to make buys every day. The only reason you're looking to make buys now is because you missed making buys when you should have, right? And I'm just keeping it real with you. I'm not arguing or trying to be mean or anything. I'm just giving you facts, right? The reason you're asking about it now is likely because you didn't buy it when everyone was scaring you. So yeah, it's not like you can just wake up and make buys every day. I mean, you can, but it's not like that's what you should be doing, in my opinion. Do you think aiming for 3 to 10% daily in options trading is a great strategy? No. I think you will not be able to do that. 10% a day? Do you know how much that is compounded, bro? 10% a day compounded? Let's see. Let's do this, all right? Let's inject some realism here. Okay. So 10% a day compounded, you would have $189 billion, 987,886,125 and 75 cents. If you took 10,000 and you made 10% a day, okay? Come on. I don't. It's crazy. It's crazy. Like, this stuff is to me, I think it's very basic math. It should be included in, every education curriculum. But, unfortunately, it's not taught very well. You know what I mean? So, no, I don't. Yeah. Do I think it's a great strategy? Yes, it would be awesome. But, no, you're not going to make 10% a day. I like that strategy. Please teach it. How to turn 10,000 into 189 billion. Yeah. Also, by the way, it shows you the power of compounding. All right. So for those of you that are, that have an issue, and I've dealt with this issue too in my trading career. For those of you that have an issue with small wins every day, look at how compounding works. Right. So if you're always going for the home run, if you're always going for the home run and you are poo-pooing what a small percentage gain every day, what that could amount to, just pull up a compound calculator and look like it. I mean, pull out a compound calculator and check it out. Pikachu says, you look like a scammer. All right. I'm supposed to take serious commentary from someone named after a Pokemon character. And also, why are you here, bro? Like, what does that say about you? That you are such a fuckboy, that you have so much time to waste, that you have nothing better to do than to watch someone that you don't agree with or dislike. Do you know what I mean? Like, do you know how much of a fuckboy do you have to be? Do you know how much of a pussy your dad had to raise in order to be someone that watches someone they don't like? Like, that's how you choose to spend your time? Come on, bro. All right, we got to that volume imbalance. We got to that volume imbalance. That I was calling out. So I think from here, I think there will be a rejection to take out these equal lows. Not today, right? It can, like, actually, if you go back to the last time it did this, that reversal happened in the same day. So we took out the, we opened here, took out the VI, and then came down to those equal lows. I personally don't think that is going to happen today. I think over the next few days, we'll get a rejection down to here. That's what I think is going to happen. Man, crazy thing is, yeah, I posted this morning, by the way, on Twitter. Right here at 9:05 Eastern. But I was saying that we're going to dig into this area. That was 18,151. And right now, NASDAQ is at 18,253. That's over a 100-point move. That's over a 100-point move into that daily VI. So now I'm going to be looking for some weakness here, right? Obviously, we can continue to trade into. I personally don't think so. Today, let me see actually on the lower time frame if we have any highs here. Okay, so we are digging into. So this right here is the BPR that I was talking about, or sorry, the VI that I was talking about. And then we have a 1 hour fair value gap here. So I think if we trade up, this will be the extent of it, in my opinion. In my opinion, there is a chance that we target these equal highs here, these ones. But this is why we wait and see for confirmation. So we started digging into that 1 hour fair value gap. We do have relative equal highs at 18,346. Again, I'm talking about the NASDAQ here. I'll tell you why I'm not interested in trading the S&P 500 today. Because would you take a short here? No, dude. Come on. You cannot just short randomly. Come on. You cannot just short randomly. You have to wait for an event like this, okay? But you are looking for when that event might take place, right? So these upper imbalances here from the high time frame, these upper imbalances here, what I want to see is I want to see it trigger a rejection, not to short. I want to see it trigger a rejection to do that. My God. This is a 5-minute time frame. You see it up here. It says that. Also here in the watermark, it says NQ5. So the reason that I wouldn't trade ES is because ES doesn't have, ES right now is at all-time levels, right? We don't have the imbalances that NQ has. So when I'm day trading, I'm looking for targets, right? I'm looking for targets. I'm looking for obstacles. I'm looking for anchors. I'm looking for signals. I'm looking for markers. I have all of this with NQ right now, right? I have the volume imbalance. I have the 1 hour, it's the 1 hour fair value gap, etc. But ES will follow NQ, correct? No, dude. No. You cannot enter blind trades on ES based on NQ. And they do diverge quite often, you know. But yeah, you cannot follow blind trades on one over the other. Oh man, on gold, that 5-minute fair value gap, that was the entry. And I think it gets here. mm, 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 mm. Oh, you can't see the time frame? All right, my bad. Wait, you can't see this right here? What'd you have for breakfast? I don't usually eat breakfast. All right, here we go. So we dug into that 1 hour fair value gap. Oh my God, dude. Follow along with your chart. What do you mean you can't see the decimals? Let's hear what Powell's gonna say.
And the inflation and our response to it. I think as the overall inflation continues to come down and rates then come down, you'll see the housing market start to heal and get better, and housing affordability should go up again. But you're still going to be left with the longer-term problem of supply.
Right, right. I think that's right. I mean, what I see in Minnesota is that higher interest rates are, of course, driving up the cost of construction. They're driving up the cost of mortgage rates. You're seeing people who aren't leaving a house that maybe is a little too small for them because they can't afford it, that the housing, just as you're saying, people are staying in their homes longer. And so there's sort of this double whammy of construction slowing at the same time that there is this great need to address housing supply. One of the things that is happening, it's interesting, a recent analysis by Zillow found that the monthly mortgage payment let me get this right. A recent analysis by Zillow found that the monthly mortgage payment on a home, on a $343,000 home, assuming 10% down payment, is about $2,200 a month. Okay, so $2,200 a month. That means the cost of owning a typical home is higher than 30% of median income, which is kind of the measure of affordability. And so we've got a lot of issues with people just being priced out of the housing market.
God, so many instructions. Move your cam. I can barely see the guy behind the woman. Oh my God, bro. All right, what I want to see here is a rejection and a break of structure. All right, so what I'm looking for here, you front ran it, Jixer? Stop it. I'll get to Tesla in a second. I really just want to see if market structure breaks here. These are the high time frame imbalances that I was targeting. Okay, if we run through this 5-minute fair value gap here, if we run through it, then that'll be a sign that we want to go lower. If we just completely ignore it, we already ignored this one. If we ignore this, you know I top tick these. Yeah, I do know you front run all of my trades. If I just post an idea, you'll front run it and somehow make money on it. Yes, I do know that. All right, let me I'm going to get back to NASDAQ. That seems to be the only interesting thing to me. Can you please tell us how to trade small accounts? Kind of a general question, but yes, I'll give you some pointers, okay? I'll give you some pointers. Tesla, what do I think? What do you want me to look at on Tesla? I still think the daily thesis is the same. I think Tesla is going to potentially tank some more. Agree to disagree, front ran it too. I think I'm waiting for Tesla to retrace up into here before starting to sell cover calls here. No, I'm not in the AMD credit call spread. No, I closed it yesterday. But I think that Tesla does come down. I think that Tesla does come down here for the simple reason that when it creates these ascending patterns, it usually moves very violently if those patterns are broken, right? You see that here. And I personally thought that Tesla would continue up, but it definitely, even just below the trend line itself, Tesla dropped like 10%, right? So I do think that 152 is on the table for Tesla. I am just waiting for a little bit more retracement before doing something with that. So I wanted to answer the question, first of all, that someone had about balanced price range. So balanced price range is essentially just one fair value gap followed by another on this side, right? Which you can see here. So there's this fair value gap and then this fair value gap. So it's opposing fair value gaps. But the question you had was, what's the difference between that and inverted fair value gap? NQ. Yeah, dude. No trade yet. But the question you had was, what is the difference between inverted fair value gap and a balanced price range? Is that a balanced price range happens very impulsively, where you have, and usually at the tops or bottoms, right? Where you have one fair value gap immediately followed by another. What can happen with an inverted fair value gap, all it is just a fair value gap that is that hasn't been fulfilled yet and can be traded back into. So if you have a fair value gap, right? Let's say that you have a fair value gap and, price ignores it and then comes back up. If it trades into that fair value gap, then it can be reactive. But it's not necessary that for an inverted fair value gap, it's not necessary to have one opposing it, like in balanced price range. Does that make sense? So, you might have a fair value gap here and price might be doing something like this, come down, ignore it, and then trade into it, right? Or you might have price come down like this, right? Ignore it on the way back up, trade into it, right? But it doesn't mean that if you have an IFVG that you necessarily have another one opposing it. So that's the difference between balanced price range and inverted fair value gap. Hopefully that answers your question. The person said, can you please tell us how to trade small accounts? It would help to know what are you trading, right? It would help to know what are you trading. So small accounts in terms of what? A small investment account, a small options account, a small futures account. It would really help to know what you're trading before answering your question. Tesla, to me today, looks untradeable. I have zero interest in trading this type of chop. Would highly appreciate if you provide your input on this when there is bad news all around on Apple and Tesla like it is now. How do we keep ourselves motivated? What is the bad news? Forex? I don't trade Forex, bro. So apologies for that. If you trade something I trade, I'll be able to answer you. I don't trade Forex. And futures? Okay, so you should either go prop if you have a small account. You should either go prop. Actually, you should only go prop, in my opinion. Also, what people make the mistake of, and this is, you should not trade at all or even consider trading at all. What people make the mistake of is they have like a small amount, like $1,000, sometimes worse, even $100. And I'm not saying it's bad to have no money. I'm saying that trying to trade that small amount of money without having a regular source of income, without having the intention to bring in more money, if you're in that position, you should not be trading at all. If you just say, I have $1,000 and that's all I have, and now I want to trade my way to riches, not going to happen. Be realistic with yourself. This is not going to happen at all. I don't care what Twitter post or Instagram post you see. That is not going to happen. The only way that you can turn a small amount of money to a large amount of money is if you can learn along the way and if you have a regular source of income. If all you have is a small amount of money and you never ever intend to use any more money to learn or fuel your learning, then you should not be trading at all. You should take that $1,000 and put it in the bank, or buy some stock and just let it sit, or buy some Bitcoin and let it sit, right? But you have to be ready to fuel your learning with a regular income, so you're not thinking about this $1,000 like it's the end of the world. You have to be ready to do that. In my view, prop firms have changed the game entirely. Paying $49 for a top step evaluation is unreal. The fact that if you are good enough, you can then get a funded account and run that up unlimited. That should be your goal. That should be your goal. Not, I'm trying to, I saw someone on Twitter. Oh shit. 1 second. My battery's about to die on my computer. I didn't realize it wasn't plugged in. 1 second. My cable fell out. Bless you. If you are trying to fuck, I lost my train of thought. But what I was saying is, trying to because you saw it on Twitter, you saw it on Instagram. You know, someone's like, I bought one call option on SMCI and I took it from, you know, $1,000 to, you know, 18,000. That's not fucking trading. That's you got lucky on one earnings play or one news play, and you are now showcasing your win. That's not the sign of a profitable trader, right? The sign of a profitable trader is I got funded and now I'm trading within proper risk management rules, only risking 0.5 to 1% of my account on each trade, 2 to 1 R trades. And every single day I'm consistently trading within my rules. Even if you lose, you're taking small losses because you're trading within your rules. And when you win, you're winning disproportionately because you're trading within your rules. Ay. Would you say is a proper amount to start trading when entering futures? I would say go prop, man. Go prop, and then you don't have to think about that. Do you like Surface Pro? No. But you can trade NQ and ES? You can or you can't? What are you saying, Frankie? $50K minimum if professional. You don't need any of that. Just pay for a Top Step account. Like, look, your goal is to be profitable, right? Your goal is to be profitable and to make money. So if you cannot be profitable with a prop account, then you probably can't be profitable with real money. So why not go the prop account if the prop route if you have a small amount of money? Do you know what I'm saying? Like, you'll prove to yourself with very low stakes and very high reward. Like a prop firm is telling you, pay $49 and you can run this up as you like if you're good enough. Right? So if you are worried about a small amount of money anyway, go the prop route and see if you can trade realistically within a narrow set of risk parameters. And if you can't do that, well, then you weren't ready for real money anyway. Does that make sense? And if you're looking for a $49 Top Step account, check the link in the description. You can get a Top Step account for $49. Yeah, of course you can have multiple accounts. Yes. What is gold doing? Oof. Yeah, but see, I think we'll trade some more into this. No, it's not an entry yet. There's a 1 minute fair value gap here. Can you SPX options and prop accounts? No. Also, you don't want to trade SPX options. That's a horrible way to try to be profitable. You should be trading S&P futures. The thing is, day trading options, there's no risk management. None. It's either I made 100% or I lost everything. There's no risk management. I used to try to day trade SPX options. Well, yeah, tell him, Pause It TV. I mean, you have experience with it. All right, let's see what happens here. I mean, on the 5 minute, this is still a long setup. On the 5 minute, this is still bullish. So so what would be awesome here if we reject off this order block, right? Because we bounced off of that 5 minute fair value gap that I was talking about. So if we reject off this order block, break structure now, this right here, break structure, and then retrace. GC, it tipped that 1 minute fair value gap, but it didn't. I think it will breach it some more, guys. Let's see. What is the line you have? 200? What line? Jason, welcome, bro. What's going on? Was there another question that I had to answer? I think I answered the most important questions. Let's see what Powell is talking about while I look for setups.
But the rest of it is a lot of costs in the supply chain from when it leaves the farm to get collected and processed and trucked around and then put on the shelves and then the stores, and all those costs are just part of the general economy. So as the labor market cools off from its overheated status 2 years ago, you will see, and you have seen, food inflation flattening out, and so the really high rates of inflation have come down. Yeah. The prices, of course, have not.
Correct. I would just say that cattle's doing better.
What
Grain
the?
actually has
Of
dropped in
course,
price at the
some
farm
dude
gate.
who
I
sounds
don't
like a
wanna get into
farmer
that debate with you at all
is going to be talking about cattle.
We probably agree, but it'd take too long, take too much time. We got other stuff to talk about.
I'd be learning from you.
You've
Like, for real, he's asking Jerome Powell how to raise his fucking cows? Come on, bro. It's such a waste. Like, these people are getting paid by us, too. There's such a waste of fucking money, of tax money. Imagine that part of your paycheck goes to all of these clowns sitting here. Ironically, not Jerome Powell, because he doesn't work for the government, but all the other clowns asking him about cattle and border crisis and the cost of fucking Lay's potato chips, like, and crime. You know what I mean? Like, come on, bro. These people, this dude literally put a suit on. He got that suit dry cleaned with your tax money. Also, his name is Mr. Tester. This is like a Simpsons skit. How much of my paycheck has been sent to Ukraine? Ukraine, Israel, yeah. And we're sending our money to countries that have free healthcare and free schooling. Avgo, when are they reporting earnings? today, right? All right, let's look at AVGO real quick. Thoughts on Chewy? Thoughts and prayers, my man. Thoughts and prayers on Chewy. Oh, yeah. I'm not entering gold here. This is too much of an impulsive move down for me to entertain a long here. If this breaks, I actually think that might be the extent. That might be the extent of gold. I might hold a multi-day position in gold again. Do you use phone verification when joining your Discord? I don't know. There's some sort of verification. We also subsidize Israel citizens. They receive a living wage. Yeah. It's so funny. I'm looking at the viewership, the live stream viewership, and the minute that I mentioned Ukraine and Israel, we lost like 100 viewers. All right, so on AVGO, here's the crazy thing. Yeah, I know. You would think that people are not proud to be from this country, right? The options market overestimated AVGO stock earnings move 67% of the time in the last 12 quarters. So most of the time it doesn't beat the expected move, and this is the largest expected move ever for AVGO. Broadcom. This is the largest expected move ever. So it's plus or minus almost 9%. There can't be discussion about these issues. I agree. So plus or minus 9% on AVGO is... Will you buy Apple stocks? Yeah, I own a lot of Apple. What are we talking about? Plus or minus 9. Hold on, let me see. Wow, $116 move. So here's what the options market is pricing in. Basically, this or this. That's wild. It's so hard, man. It's so hard on semis to play an iron condor. Like the logical move here is to trade an iron condor, right? With this as your upper range and this as your lower range. That would be the most logical move, right? And hoping that Broadcom stays in between. Strangle. Dude, it needs to make such a big move for you to make money on a strangle. You were likely throwing your money away. But yeah, I mean, the most logical move would be an iron condor. I'm personally not going to trade it. The one thing that I think Broadcom has, and I went over this in yesterday's live stream, but the one thing that I think Broadcom has over all the other semis is it is currently trading at 40 PE. But if you take a look at NVIDIA, AMD is super inflated. ARM is probably the worst. ARM is like a 1600 PE, right? So if you take a look at all the semis, Broadcom is one of the least inflated. It's still expensive by general metrics. But yeah. Gold. Oh wow, man. Like it really wanted the last freaking order block known to man before rallying. So bounce off of that order block. Okay. Apple, I mean, like isn't that something that people want, right? They're relishing the opportunity to buy a blue chip like Apple at a cheap price.
That in many cities, the downtown office district is very underpopulated. There are empty buildings in many major and minor cities. It also means that all the retail that was there to service the thousands and thousands of people who work in those buildings, they're under pressure too. And banks will have made loans to many of those buildings. Not all of them, but many. So this we've known for some years. And so what do? We have identified the banks that have high commercial real estate concentrations, particularly office and retail, and other ones that have been affected a lot. We identify them, and we are in dialogue with them around, do you have your arms around this problem? Do you have enough capital? Do you have enough liquidity? Do you have a plan? You're going to take losses here. Are you being truthful with yourself and with your owners? And so we've been working with them. And so for some time we've been doing that. And this is a problem that we'll be working on for years more, I'm sure. There will be bank failures, but this is not the big banks. If you look at the very big banks, it's not a first-order issue for any of the very large banks. It's more, smaller and medium-sized banks that have these issues. We're working with them. We're getting through it. I think it's manageable is the word I would use, but it's a very active thing for us and the other regulators, and it will be for some time.
Thank you. Do you have concerns? Let me just ask you this. As you're talking with these small and medium-sized banks, because we know there's always could be a contagion, which we've seen in the past, do you have concerns that if they fail, that somehow this is going to impact the financial sector? And are you prepared and trying to address that and prevent that from happening?
We're trying to stay ahead of that. So we also reached out to banks that had high concentrations of uninsured deposits, and particularly uninsured deposits, and a lot of commercial real estate in the office sector. So we're well aware of that issue, and we're just trying to stay ahead of it on a bank-by-bank basis and overall.
Okay.
And so far, we've been able to do that.
Thank you. Let me jump to another issue that has been on my radar. The Federal Housing Finance Agency's report on the federal home loan banks concluded that the distinction between the
no retracement for
FHL
gold
bank's role and that of the Federal Reserve discount window as lender of last resort has not been clear, especially during times of market stress. During the 2023 banking turmoil, we saw banks rely on advances from
at least this Miss Cortez Masto is asking really good questions
to use its discount window. I know you've talked a little bit about this with Senator Warner, but how is the Federal Reserve working with the federal home loan banks to ensure that banks establish protocols to borrow from the Fed's discount window prior to times of stress?
Finally, somebody with
We
brain
work with the
cells.
Federal Home Loan Banks because in many cases, banks were moving their loan from the Federal Home Loan Bank to the Fed. So we need to have smooth transfer. We need to be in good touch with them. Even more important than that, though, is that banks, any bank in the United States, needs to be in touch with the discount window, know how to be able to access it, be able to access it, have appropriate collateral, have control of that collateral. You know, in many cases, it was incredibly inefficient and took a long time for banks to actually go through that function. The Federal Home Loan Banks are actually ahead of us in technology. We know that we need to really invest in technology to modernize the discount window, and also we need to do more to make to get our banks, all of them, in touch with the discount window in a way that they can use it quickly should they need to do so.
Thank you.
Cortez Masto, Senator Haggerty of Tennessee is recognized.
I never heard of her. I like her line.
Thank you, Chairman Brown. Welcome, Chairman Powell. Under your tenure, Mr. Chairman, the Fed has taken the stance that the 2% inflation target shouldn't be viewed as a snapshot in time, but rather it needs to be achieved, quote, sustainably. When inflation was running well above the 2% target back in 2021 and early 2022, the Fed was patient and allowed rates to offset the below target inflation that had occurred in the years prior. It strikes me as odd now that while we're still well above target inflation and have been well above for the prior year, markets seem to expect the Fed to immediately cut even before we've breached the 2% inflation
Good
threshold.
question.
So my question is this: if the inflation rate reaches 2%, would that be considered a return to the target rate on a sustainable basis? Or is it still the case that inflation would need to more or less overcorrect to well below 2% before the Fed makes the rate cut adjustments?
So it would take us a while to really get comfortable that inflation had settled in sustainably at 2%. But that's not our test for changing interest rates. Interest rates right now are well into restrictive territory. They're well above neutral. And we've said we would not wait for inflation to get down to 2% because if you wait that, monetary policy works with long and variable lags. So we've said, for some years that we would start restoring the federal funds rate to a more normal, almost neutral level. We're far from neutral now.
Yeah.
And so, we do plan, assuming the economy moves along the lines we expect, we do plan on starting the process of dialing back restrictions.
I'm just trying to look for the symmetry. I know we sort of allowed the economy to overshoot when inflation was high, and we sort of made up for prior years of low inflation. I'm trying to square that with the fact that
we didn't actually do that. We adopted a framework that said we would do that, but then we got suddenly, a few months later, we got almost an explosion of very high inflation. That's not what we were looking. We said, moderately above or modestly above 2%. This was not modestly above 2%, and we reacted. We thought that the mistake we made was we thought that inflation would go away.
that it was
quickly,
transitory.
which means it goes away quickly without effort by us. We figured out at the end of 21 that was not the case, and we acted.
And you don't see that same abrupt dynamic coming the other way. You're more comfortable.
No,
with
I think we're in the right place, which is we're waiting to become more confident that inflation is moving sustainably at 2%. Mm-hmm. When we do get that confidence, and we're not far from it, it'll be appropriate to begin to dial back the level of restriction so that we don't, drive the economy into recession rather than normalizing policy as the economy gets back to normal.
Yeah. Can we go to the balance sheet and talk about that? We've seen a dramatic expansion of the Fed's balance sheet over the past couple of decades. In 2005, it was at $800 billion. It's at $7.5 trillion today. It's doubled since the pandemic was underway. And through quantitative tapering, the Fed is attempting to reduce its footprint. And the concern I have is, on the other hand, government spending tends to just continue to be profligate. We're running now a $1 trillion deficit every 100 days. And we're flooding the market with Treasury debt, and we're putting upward pressure on interest rates as a result. And what I think that is lost on many of us here is that the spending levels will only make your job harder when it comes to lowering interest rates, not to mention there's a tacit expectation that the Fed will step in once the markets can no longer absorb our new issuance. I think this is a very serious problem. I think it deserves more attention. And I think we're now at a point where your objectives may be very much at odds with the behavior of our fiscal policy. Am I missing something here, Mr. Chairman, or does increased net issuance by the Treasury lead to higher rates?
I mean, in principle, more supply should lead to modestly higher rates, but that's not going to affect what we do. That's not a problem for us. Our balance sheet normalization is running very much as expected. We've decreased the size of our holdings by almost $1.5 trillion.
I hear you. I think it's troubling that we continue to put fiscal pressure by continuing to put, again, we're running a deficit of $1 trillion every 100 days, and the issuance is required to deal with that. We're putting a lot more pressure, I think, on the Fed, and again, making your job harder. I think we need to take that into consideration. Another component of this topic, your colleague Governor Waller said he'd like the Fed to shift its holdings toward a larger share of short-term treasuries. Back prior to the financial crisis, about a third of the Fed's holdings were in bills. Now they're around 3% of your total securities holdings. Do you share the goal with Governor Waller? And if so, how long will it take us to get there?
Take a while. That's an issue. We're in our FOMC meeting in a couple of weeks.
Yeah, this gentleman's questioning and the last lady's questioning were amazing.
This meeting, but over time, you'd love not to.
And you could tell the way that that Jerome was engaging with them, right? He's taking them seriously. When they ask him a question about fucking knife crime on the subway of New York City, like, what's he gonna say? You know what I mean?
Just one final point, Mr. Chair, and you and I have talked about this before. We're in an election year. You're getting a lot of pressure, I hear it from lawmakers, to adjust rates. I'm not telling you to raise rates or lower rates, but I'm just here to emphasize the fact that the credibility of the Fed depends on your remaining data-driven. The credibility of our currency as the reserve currency of the world depends on that. And
what do you think he's lying about?
Thank you.
Will do.
Thanks, Senator Haggard. Senator
Warren
of Massachusetts.
No.
Thank you, Mr. Chairman. So it's been a year since we had the second, third, and fourth largest bank failures in American history.
Get ready for a Saturday Night Live skit.
Bank executives were part of the problem, and the Fed, as the chief regulator of the biggest banks, was part of the problem. Under your leadership and direction, the Fed steadily weakened rules for the biggest billionaire banks, exactly the banks that failed last March. In other words, Chair Powell, you failed to do your job to keep these big banks in line. Now, when these banks blew up, you went into spin mode, promising that the Fed would do better. After years of hemming and hawing, you finally agreed to put in place Basel III rules that would strengthen capital standards for the biggest banks. And I mean the biggest banks. The Fed's proposed rule would apply to only 37 of the nation's 4,500 banks, only the banks that have $100 billion or more in capital. Now, Chair Powell, when you testified before this committee last June, I asked you about taking responsibility for bank failures. And you said, quote, "The main responsibility I take is to learn the right lessons from this and to undertake to address them so we don't have a situation like this where we had unexpectedly a large bank fail and spread contagion into the banking system," end quote. And as part of learning those lessons, you also said, quote, that you agree with and support, end quote, Vice Chair for Supervision Barr's recommendations for strengthening the Fed's rules and supervisory practices for the big banks, and that you're, quote, confident they will lead to a stronger and more resilient banking system, end quote. So I just want to be clear. You haven't backed down from any of your comments from a year ago, have you, Chair Powell? Right lessons, don't let this happen again, supporting Vice Chair Barr's recommendations, which include stronger capital standards.
No.
You still stand by all that?
Yeah.
Good. I'm glad to hear that. Now, I understand that those 37 big banks don't like higher capital rules because they are like insurance. You know, they would make the banks safer, but they cost a little money and would nip into the bank's profits. So these 37 banks are swinging their very considerable weight around to try to weaken the capital rules. They've spent tens of millions of dollars running ads during Sunday night football and millions more for an army of lobbyists to try to twist arms here in Congress. Impressive spending, but who exactly are they trying to impress? A man on the inside? You know, despite all you said last year when the banks failed about supporting Vice Chair Barr's recommendations to strengthen rules for big banks, public reporting now says that you are driving efforts inside the Fed to weaken the capital rule. You even told the House Financial Services Committee representatives yesterday that you think it's, quote, very plausible, close quote, that you withdraw the rule. As one analyst put it, quote, I don't think they will pass a final rule without Powell's support, suggesting that the rules will have to be weakened, quote, to appease Powell. So, Chair Powell, I'm having trouble.
We have divergence between NQ and ES. That's what I'm looking at.
You hold on to statements you made when the headlines were all about 3 giant bank failures, and now your reported efforts to quietly weaken the rules that would strengthen capital standards for giant banks and prevent more bank failures. So let me just give you a chance to clarify the record here. Are you committed to finalizing the strongest version of the Basel III capital rules this year?
Let me first say that we have taken and are taking many more steps to deal with the problems that revealed themselves with Silicon Valley Bank, and that's around supervision. We'll have a strong liquidity.
I appreciate that, but I'm just asking about the Basel III rules, the ones that you have been required for years now to put in place and have dragged your feet on.
The Basel III rules are not directly related. They're not the thing that is directly related to Silicon Valley Bank. As you point out, they're a longer run thing, and I would just say that we put them out for comment. We got the comments. Anybody's free to go read the comments. My view is that it will be appropriate to make material and broad changes to that before we finalize it.
All right. What I'm looking at here is a divergence between NQ and ES. So as I said, I thought that NQ would trade up into these imbalances here. Now that it's traded up into these imbalances, there is a bearish divergence between NQ and ES, where NQ created higher highs and ES created lower highs, as you can see here, right? And you want to see this when there is an overextension, right? Now, obviously, it is very, very, very hard to justify shorting such a large day. 0.75 on ES, 1.2 on the NASDAQ. But as I said, I do think that there is a chance that this is overextended here because of that divergence into NASDAQ's imbalances, if that makes sense, right? So these imbalances here, they're not random. Like, again, if you followed me on Twitter or you followed me on if you follow me on Twitter and you follow me on the Discord, these are the imbalances that I was looking at for this morning, right? You have the balance price range, the volume imbalance, and then the 1 hour fair value gap. So all of these have been taken. And now on ES, and the reason that I'm going to ES is because ES is the one with the bearish divergence, right? This is called SMT. So ES is the one making lower highs while NQ is making higher highs. But NQ is making higher highs into those imbalances. So the one that I would be willing to short would not be NQ in this case. The one that I would be willing to short would be ES if we get confirmation. So this is why I'm looking at that divergence. Will gold hit back 2,000 in the next months? Depends. Yeah, I mean, I'm sure at some point, yeah. I was in the free masterclass this past Sunday, learned a hell of a lot. Nice, man. Yeah, we're doing another mastermind tonight. So again, if you want to join, click that link in the description. Join the mastermind program. You get access to every single mastermind upcoming. as well as all the previous ones. I'm very tempted to take a short here for a scalp. But I need NQ to reject this fair value gap. I might take it with one contract. Just a little scalp. Obviously not an A+ trade, but I might take it with one contract here. Oh, actually, no, this could be a power of 3 here. Taking that off, taking that off. We have consolidation, and then this could be the manipulative move here. I don't want my stop limit to get hit with expansion. I don't need, like, there's no need to do this now as the first trade. I should wait for an A+ trade. What's going on? Love Cavs. Green Trader says most likely. Yeah. What do you think about the Reality Inc. midterm and generally? What do I think about Reality Inc.? No idea what you mean. Oh, Realty? Is that O? Dude, this is such... Like, this reminds me of the time that people bought, what is that? What was that? The shitty company, that shipping company, that Israeli shipping company. What was it called? It started with a Z. Zin? Was it called Zin? What was it called? This one, Zim Integrated Shipping, right? This reminds me of this, where all of these dumbasses online were talking about, this is how you build wealth. You buy dividend companies. My favorite one is Zim because it pays a $6 dividend. That's my favorite one. So I'm loading up on shares of that. Yeah. And then what? And then what happens? Right? Then they pull the fucking dividend. So not only did this tank from $91, they pulled the fucking dividend, because what these clowns don't know that keep leading people to slaughter is that a company is not obligated to pay dividends. A company can literally just announce that it doesn't want to pay dividend anymore. That's all it has to do. So Zim raised a lot of capital by getting people to buy shares of their company. And they're like, yeah, we're giving away a $6 dividend. Okay. And then people were loading up. And then they pulled the dividend. The thing tanks from $92 all the way down to $6. Good job. You know what I mean? So when I look at Realty Income, it's in the same boat to me. It's like, it has all, people don't even know what it is. Like, I'm not going to put you on the spot, but I guarantee you, if I ask you exactly what is this, most of you, including myself, would have no idea what this is, right? So, like, no idea in terms of, what are the actual holdings, right? Like, what are the actual holdings? No, I'm saying that buying something just for the dividend is a fool's errand. That's all I'm saying. Okay? Yes, you're right. You're right, Milan Patel. Oh, what's going on, Milan? You're right that a REIT has to issue dividends, right? If they have if they have income, right? Obviously, if they're not making money, then okay. But REITs have to issue 90% of their taxable income as dividends. I hate this guy so much. I don't know why. Like showing up
Down in the next 5.
showing up to Congress wearing a fucking Carhartt hoodie and some Russell Athletics basketball shorts. I have no respect for that. I don't know. Something about just looking at that dude annoys me. But all I'm saying is just watch out how much money you put into these dividend plays. That's all I'm saying, right? Like buying something just for the dividend is not a good look, right? Now, if you look at the holdings of the REIT and you agree with the company, with the way that it goes about its real estate investments, then yeah, awesome. But do not just buy something just for the dividend. That's all I'm saying. So, yeah, hopefully you get that. What do I think? Yeah, I mean, if you look at, like, again, I'm not very familiar with what its holdings are, and this huge monthly Head and Shoulders is scary, obviously. But yeah, I mean, if you go back, if I just pull a volume profile tool, for instance, and I go back to June of 2015, like you could see where most of its volume is situated, right? If you go back 10 years from where we are currently, and we are well below that. So without looking into why the company has dropped steadily for 2 straight years, without looking into its financials, without looking into any of that, if I'm just looking at this chart, it's down 30% in 2 years. So I would want to know why in the first place. But just looking at this chart, a lot of volume is concentrated in that, 54 to 69 range. Oxy's good. I like Oxy in terms of an energy play. Yeah. I like Oxy in terms of an energy play. I've been in Oxy since the low 50s. Man, Celsius is killing me, bro. Celsius is killing me. The reason is I sold calls on Celsius. Like, if you see where I bought Celsius, it was December 12th. Here's my Celsius buy. You can screenshot this and read the analysis later. But here was my Celsius buy. It was $49, and today it's $90. And I'm pissed because a lot of my shares are going to get called. I'm thinking to buy gold or silver before the recession on a pullback. I think you're way too late, bro. You also called SMCI? I did. I even put that on Twitter. I put SMCI as a public alert on Twitter. Bless you. Yeah, it was on February 29th. I put it here on Twitter. I said SMCI looks prime for another rally. And it was 866. And then it was included in the S&P 500 thereafter. But yeah, Why did you sell? I didn't. I sold calls against my shares. I would not buy gold before a recession. That's just insane to me. I think the time to buy gold was when there was not, the time to buy gold is not this. Okay, look what happens to gold in a recession. People think somehow that gold is immune or something. Gold does horribly in a recession. You know, even go back to 2008. Like, gold looks like the stock market. It's the same, right? In a recession, cash is king. This is why everything tanks, because everyone go and watch my last video. But yeah, gold dropped 25% the last recession. It's not recession proof. Gold does horribly in a recession. So, you know, don't think that somehow your gold is going to rocket if you buy it at all-time highs. When you called SPY at 410, that was lit. Yeah, bro. Appreciate it. Buy a Rolex? Yes, you could buy a gold Rolex for sure. I think that buying a gold Rolex can be a good investment too. Do you think IWM will hit all-time highs? Yeah. Yeah, I think so. I've been in IWM since November. Chat, when did we get into IWM? Just so you don't think I'm making this stuff up, all this shit's timestamped. You can screen cap all of this stuff. Take a screenshot and read it. November 10th. I'm telling you, man, like, I don't know. I don't know how else to say it. But definitely, I think you're leaving a lot of money on the table by not getting this shit ahead of time. But November 10th is when we got into IWM. It was 169. IWM is currently trading at 206. So, you know, you're talking about 22% in the span of 4 months. I don't think gold can reach 2,200. Yeah, of course it can. Wow, Meta crazy. Crazy, crazy, crazy. All right, that divergence between NQ and ES is still there. But we cannot short this until we get confirmation, which will likely be after lunch. Just want to say I really appreciate these live videos and love your trading. Appreciate you, Russell. Thank you, man. Any value stock recommendations? I sent out all of my stock recommendations. Yeah, I said Disney at 80. I like Nike at 100. IWM at 169. Celsius at 49. Yeah, what else? What else did we buy, chat? TLT, which is rocking too since we bought in. Yeah, there isn't much that I'm interested in right now besides what I just called. Oh, wow. Riot just turned negative on its correlation with Bitcoin. I think Tesla, I don't think it's going to boom anytime soon, but I do think Tesla is obviously a good buy the dip situation for the long term. And then I think Apple, there's an opportunity there for sure. You know, every time Apple gets beaten up, then it rallies and people are like, man, I should have bought Apple. But I think this is a good buy point for Apple for sure. PayPal, I did buy some PayPal, yes. Unfortunately, it is underperforming now. Like I did have high hopes when it was hitting that 70 area. Down bad on Tesla at 200. Well, you probably shouldn't be investing, bro. Honestly, like, or work to change your mentality. But you probably shouldn't be investing. Like, you're buying a company, right? You're buying it for what? For the long term, right? So you're buying Tesla because you believe that it was at a good price based on what you think about the company. So you are buying it for the future. You buy it at 200, and then 1, 2, 3 days later, you start crying about it. That's not investing, right? That's not investing at all. Now, if you didn't look at all about Tesla's fundamentals and you threw a ton of money on Tesla at 200 for, short-term hope, then yeah, you're going to feel like that. But if you are actually investing, get serious about investing. Do you think that Warren Buffett or Bill Ackman or anyone cares if their investment is down 3 days later? Like, your goal is to hold this for 5 to 10 years. A lot of traders become investors by mistake. Yes. Here's what I like about you, apart from technical knowledge and execution, is leadership. Biggest influence that you had on me. How slow and composed and logical you are while trading. Appreciate you, Mr. Nice Guy. Thank you so much for the kind words. Thank you so much for the kind words. Oof. See, this is why there's no way I can short this here. I'm going to wait until lunchtime and see, after this fool's done talking, see if we can get a confirmation, a rejection and a confirmation, and then go from there. But my only play this morning, which it missed my entry, was too long at 18.1 something to take it up here. And I think that over the course of the next few days, we can come down to remove these equal lows here. Now, as I said before, there could be a slight chance it takes out these equal highs first. So now you have equal highs and equal lows. I think they're both going to get taken out. But is it a matter of rejecting these high time frame imbalances and then taking relative equal lows out like it did back in early February, or taking out the highs first? We'll see. But the confirmation is going to tell us. Right now, there's no confirmation of anything. Uninventable? What's uninventable? Uninventable. Oh my God. Taiwan Semiconductor is killing it. Is save a good buy on the low low? I mean, what do you like about the company? Baba, you're funny, bro. I don't invest in China. I'll trade the stocks. I don't invest in it. What's going on, Chess Trader? Did you talk about NMMD yet today? No, and I likely won't. The only other stock that I like here too is Google, for sure. And I ended up buying some the other day. Also sent this out. What do you think about oil? I mean, I think that it's necessary to have your cars operate if you don't have an electric car. Do we get data reports out tomorrow? Here's what's on deck for tomorrow. Non-farm, we have NFP tomorrow at 8:30 a.m. and then unemployment rate at 8:30 a.m. So yeah, huge day tomorrow. Baba's so juicy though. Okay, then invest in it, bro. I'm not willing to invest in a country where there's no free market. Like, how can I put my hard-earned money in there? Like, I'm relying on the Chinese government to make sure that earnings are reported accurately. I'm relying on them not to interfere with company operations when they locked up the richest man in China in a fucking cell in Mongolia. Like, why would I put my money in there? I don't mind trading stuff, but am I going to invest in this? No, bro. ASML? Yeah, I can't buy it here. Not at the highest. S&P inclusion most likely for Palantir. Who told you that? Nobody could know that. That's just hope because Palantir is a social media darling. Is he still in there? Oh, who, Jack Ma? I don't think anyone knows where Jack Ma is. Would you own an electric car? Sure. Why not? I agree. This is insane. This is a historic run for sure. Like, if you look at the weekly chart, if you take a look at SPY Weekly, this is one of the most historic runs of all time. For sure. The S&P 500 literally went 105 points in the span of, December, January, February, March, in the span of 4 months, for sure. This is the craziest I've ever seen. Even more than 2020. Well, I take that back. In 2020, the S&P went from 218 to 480. But that was in the span of a year and a half. All fueled by AI, which few people can truly understand. Yes, but that's not how the market works. So the market works by essentially allocating liquidity. Is there excessive liquidity in the system? Clearly, there is. And it has to find its way into trending things. That's literally how the market works. e-tron or Tesla, I really like the Audi e-trons. And they're on major sale right now, by the way. I know someone that got an e-tron. What is the sport looking e-tron? The e-tron GT. I know someone that's $120,000 car. I know someone that got it for like $670 a month. That is that and the Porsche Taycan are, to me, the sexiest looking EVs on the market. They are so, I mean, wow. It is such a dope car. Yeah. If I can get that for shit, 650, 700 for sure. That's a $120,000 car. All right. It's lunch, so I'm going to break here. And just like yesterday, we'll likely take a trade in the Discord for sure. We'll likely take a trade in the Discord. So yesterday, before breaking, I told you guys that NQ was looking like it wanted to go short. And this was yesterday. And we ended the stream around the same time here before NQ totally took a shit. So hopefully we can get a similar move here. I will be sending that out in the Discord. Mastermind tonight, for those of you that aren't in the Mastermind program and want to join, make sure you click that link below. For your first Top Step account, also click that link below. You'll get a Top Step account for $49. And for those of you that just want the plays and, you know, not the Mastermind, you just want to join the monthly, that link is also in the description below. But for those of you in the Discord, I will see you guys in a second, and hopefully we can get a juicy play post-lunch. Thank you guys so much for joining. Appreciate you guys. Peace.